If you search for the best ELSS funds, the Bank of India Tax Saver Fund features in almost every list. But it is not a very well-known fund despite giving stellar returns. This tax saver fund ranks among the top 3 if you look at the 5 and 10-year returns. Yet, the fund size is just 951 crores, so it doesn't feature even in the top 20 largest ELSS funds. So despite a 14-year history and a track record, not many investors have discovered this scheme. Now these facts about the fund made us curious, so we decided to analyze it for you. We wanted to check if it was a hidden gem or whether the outperformance was temporary. We looked at the fund from different angles. We checked its performance over the long term, its investment style, unique stock picks, and many more data points. It's an interesting fund. Watch this video to know if it suits your investment preference. But before we begin, a quick reminder. You're watching this video on the ET Money English channel. हमारा एक हिंदी चैनल भी है जहाँ पे सारी वीडियोस हिंदी में देख सकते हैं. And if you are or know somebody who wants to understand the basics of finance in a quick and easy way, we have a channel called 5 Minute Finance. Do check it out. Alright, now let's begin. We looked at 3 different sets of returns. First, we checked the returns for different periods. Now the fund has done well for the past 1, 3, 5, 7 and 10 years. And not just that, it has consistently done better than its benchmark and the category average. For example, in the past 10 years, the fund has had close to 18% returns, and its benchmark, the S&P BSE 500, delivered around 14% in that period. The fund category average was around 16%. But the past 5, 7 or 10 year returns don't give a complete picture of a fund. A good performance in 1 or 2 years can make these long-term returns look attractive. So we decided to look at the rolling returns. Now rolling returns show how consistently the fund has performed. We looked at the average 3, 5 and 7 year rolling returns. Now even in this case, the fund has done much better than the benchmark and the category average. This tells you that the fund has consistently performed in the past. So the data shows that the fund has done well in different periods, and the rolling returns show that it has been a consistent performer. Now, we also looked at the returns for each calendar year. While the returns were fine, we noticed some inconsistency in this case. But we will discuss that slightly later in the video. The fund's allocation to mid and small cap stocks is one of the big factors that contribute to its high performance. The fund has more than 46% of its portfolio allocated towards mid and small cap stocks. For the category, this allocation stands at 34%. The difference is quite huge. So now this means its allocation to large caps is lower than the category. The fund's allocation to large caps stands at 51%, where the category average is 64%. But this is not a recent trend for the fund. Historically, the fund has maintained a higher investment to mid and small cap stocks. As you can see on your screen, the fund has had a mid and small cap portfolio for a while now. But just the allocation to mid and small caps doesn't explain the outperformance. So we decided to look deeper and analyze what the fund manager has bought and sold. The fund manager's stock picking was top class, and the bets played out quite well. We looked at the stocks portfolio of the fund and saw how many other schemes in the category hold the same stocks. The fund manager took some uncommon bets. For example, Indian Bank, HEG Limited and JTEKT India Limited. These stocks were missing from funds in this category. In fact, we saw that about 25% of the AUM is allocated to such uncommon stocks. There are 19 businesses that are present in the Bank of India ELSS tax saver fund that were ignored by most other tax saving funds. These bets show that the fund manager can take contrarian calls. Now in any fund, if such contrarian bets play out as per the fund manager's expectations, they contribute to the fund's success. Now we also checked out the top 10 stocks where the fund has the highest investments. Let's see what that reveals about the fund manager. The top 10 investments show where the fund manager's conviction lies. It can give us an understanding of the fund manager's stock picking ability. So we looked at the top stocks that the fund manager bought and sold between October 23 and 24. The fund manager's stock picking ability and conviction in his bets appears to be outstanding. The timing of buying and selling couldn't have been better. For example, Power Finance Corporation rose 165% between October 22 and 23. But in the previous years, the stock performance was unimpressive. The fund manager invested in the stocks soon before the rally started. We saw the same thing for the fund's other top bets like the Union Bank of India, RAC and L&T. And this was not a one-off. The fund manager has managed to do this year after year. We also looked at stock picks between October 21 and 22. Some of the top bets like Mahindra & Mahindra, ITC, Axis Bank and ICICI Bank played out well. The fund manager's approach seems unconventional, but it has worked so far. In fact, there is one more unconventional aspect that we came across. If you hear well-known fund managers, most of them talk about buy and hold strategy. They invest in a stock and can hold them for years. We have seen many popular fund managers holding stocks for more than 3 or even 5 years. But in the case of Bank of India ELSS tax saver fund, the fund manager doesn't strictly follow the buy and hold strategy. For example, in October 23, the fund had 64 stocks. Of these, only 27 stocks were present in the portfolio in October 22. The other 37 stocks were bought between October 22 and October 23. And the same trend has been followed in previous years as well. The average holding period of a stock in this fund is about 1.5 years. Now you may be wondering, is it a good or a bad thing? Well, there is no conclusive answer. As an investor, you have to trust the fund manager and let him or her manage the scheme to the best of their abilities. We just wanted to highlight these aspects to show you how the fund has managed its stellar performance. But obviously, like any other fund, the Bank of India ELSS tax saver fund has aspects that many investors may not be comfortable with. Let's talk about some aspects that are usually considered risky. Remember that we spoke about the returns at the start of the video. We told you that we noticed some inconsistency when we looked at the returns for each calendar year. Well, before 2018, on most occasions, the fund either underperformed the category or gave similar returns. It started consistently outperforming from 2019 onwards. Before 2018, on 1 or 2 occasions when the fund did well, it outperformed the benchmark and category by a huge margin. For example, in 2017, the scheme outperformed the benchmark and category by 20 percentage points. This massive outperformance makes everything look good over the long term. But this sudden jump in one calendar year indicates that the fund could be more volatile than its peers. So we looked at whether the fund falls more than its peers when the markets see a correction. Well, in 2018, it did. The fund fell much more than the peers and the benchmark. So these aggressive ups and downs mean the fund is more volatile. Now let's look at the volatility aspect in more detail. We looked at the fund's performance when the benchmark gave negative returns. Now since 2013, there have been 13 quarters when the benchmark gave negative returns. And out of these 13 quarters, the fund fell more aggressively in 7 of them. This shows that the scheme has higher volatility and downside protection is not one of its strengths. Now analysts look at something called as standard deviation to understand the volatility of a fund. We don't want to get into the technicality, but for most periods, the fund has a higher standard deviation than the category. This is another way to say that it's more volatile. Now there are 2 more aspects of the fund that can make some investors uncomfortable. In the past 10 years, the fund has seen 4 different fund managers. According to the data from Morningstar, the current fund manager, Alok Singh, was appointed in April 2022. The previous fund manager managed the fund for about 3 years. Now some investors don't prefer change in fund managers as it can impact the fund's strategy. Every fund manager has his or her style of picking stocks. When a new fund manager takes charge, he or she usually makes changes to the portfolio based on their preferences, and this may not go down well with some investors. The fund also charges a higher expense ratio compared to its peers. Now, let's talk about the last aspect that some may find risky. Is the scale of operation of the Bank of India mutual fund. The fund house has less than 20 schemes in debt, equity and hybrid categories despite being an old player in the mutual fund space. Compared to other established fund houses, most of its schemes are small. Among equity schemes, the tax saving scheme is the largest with an AUM of 951 crores. Now many investors prefer fund houses with a far bigger scale of operations as it signifies more stability. So that's the complete picture of Bank of India ELSS tax saver fund. To recap, the fund's returns are good and stock bets have worked. But the performance is recent, it's volatile and it has seen frequent fund manager changes. And with this, we have come to the end of this video. We hope you found this video useful. And if you did, don't forget to like, share and comment. And I'll be back with another video soon. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.